Going to have Chad come in to pitch a crypto, but for right now, we do have Dividend Hero, who is going to be pitching a stock. Steven, who I plan to pitch a stock, but maybe he'll have to pitch us some crypto also, because I know that you're big into that. Quigley, who's going to hit us with some NFTs, and then I'll try to fill in any blanks. Shout out to our co-host, Asset Dash and Stock Market News. If anybody wants to learn more about Asset Dash, you've just heard a little bit about them. There is information pinned up top in the space. We're going to do a little bit more into that in between the speakers, just explaining how you can best use this app to ensure that your financials are in place and accurate. And with that, I don't want to waste any time. We're going to go ahead and get rolling. I'm going to turn over the floor to my good friend Dividend Hero to pitch us a stock. So we're doing about 7 to 8 minute pitches, and then I will ask some questions.
Awesome. Hey, Gav. Hey, thanks for that intro. Good evening, everybody. I guess we'll start there. Yeah, super excited to be here. My stock this evening is Home Depot. So a name that I like a lot, and that full disclaimer, I do own shares in Home Depot. So this one, when Gav reached out to me about hopping on the space, it was honestly the first name that came to mind. So it was already top of mind. The stock reported earnings recently and is in the crosshairs of a lot of macroeconomic headwinds right now in terms of inflation and the housing market and the Fed raising rates and things like that. So it's a name I've been paying really close attention to. So I kind of wanted to go over it today, start at kind of a higher level, and then get into the weeds, kind of go over a little bit of their earnings report, kind of go over a few of the highlights and kind of how their future is looking right now. So Home Depot, I'm sure most people on here are familiar with it, but they're a large retailer, and they sell all kinds of products from home improvement to power tools to lumber, nuts and bolts and screws, things like that. So I'm sure most people are familiar with it. Stock ticker HD. They have about 2,300 retail stores around the world, and they're in all 50 states in the U.S. And they employ about 500,000 people. So whenever they report earnings, they give a very good insight into the retail sector, since they're covering whole parts of the country. They've got locations in all 50 states. They're not localized. They're not just showing the Southeast or the Northwest. They're a nationwide company, so they're pretty big. So just some broad reasons that I own Home Depot and I really like Home Depot is one, they're Amazon proof. So you're not going to buy nuts and bolts and screws and lumber and power tools and things like that on Amazon. You're going into a physical retail store, and as the shift to e-commerce grows more and more every single day, a lot of that shift, Home Depot has a good moat around, I'll say, in terms of the things that they sell don't really work well in an e-commerce environment. So they have a lot of retail presence, and so that's one reason that on a broader scale that I like Home Depot. They also invest heavily in they're an American business, and they invest heavily in their supply chains, and so they've really been able to navigate this whole supply chain crisis fairly well compared to other companies. They rent private cargo ships, or they own private cargo ships, so that kind of helps with some of the supply chain disruptions. They're not using third party services to get their goods into the United States. And they also do a lot of things in the United States in terms of supply chain, and so they're not outsourcing a lot of things to China or to Asia, and relying on them as heavily. So they're able to navigate that kind of environment really well, which has definitely benefited them as of lately, compared to some other retailers that really had a tough time with that. So Home Depot did report earnings recently. I actually don't remember the date off the top of my head. It was about a week ago. So I kind of just wanted to run through some of their numbers. Their sales were up 10.7% year over year for Q4. So Q4 of last year to Q4 of this year, sales were up 10%. And then for the fiscal year, of 2020 versus 2021. So their most recent earnings report would have been reporting earnings from Q4 of 2021. So now we have a full picture of how they performed in 2021 versus 2020. So in 2021, they crossed $150 billion in sales. They're at $151 billion, which was a 14.4 increase from the year 2020. So this was a record year for them. 150 billion, pretty big milestone for them in terms of sales. They've grown their business by 40 billion in the past 2 years, and they've used a lot of that to invest in their employees and invest in their supply chains. Their management team is really strong, and their supply chains, they've been investing in those in years, and those investments have really paid off as of late. And so that's been a great way that they've grown their business. Like I said, 40 billion in sales the past 2 years, which is incredible. And they announced a 15% dividend increase, which I was super happy about. I always love to see that out of my companies, especially a 15% increase. It's pretty solid. So now they're up to paying $1.90 per share quarterly, which is $7.60 per year. And they're one of the faster dividend growth stocks out there. They're raising their dividend. The 5-year growth rate is 22%, 22.7% compound annual growth rate for their dividend, which is super impressive. They're generating tons of cash. They're putting plenty back in the business and growing it that way. But they're also paying out plenty to shareholders, and it's growing at a massive rate. And so definitely a high performer there on the dividend growth side. But it definitely isn't super rosy on all fronts for Home Depot. So for the second straight quarter in a row, their customer traffic was negative. So they have less people visiting their stores. But the main reason that their sales grew was higher spending per transaction, which some of that has to do with inflation and cost of goods being higher. But also more people, at least in the past 2 years, have been focusing on home improvement projects and bigger projects. And so sales per transaction cost has been higher. And so that has helped fuel their sales growth. But it is a little concerning. The customer traffic was negative. Some of that might be due to e-commerce. Some of that might be due to other competitors popping up in the market. But another one was a lot of pressure in the housing market from inflation and rising interest rates. So, I mean, as we all know, the housing market has been crazy the past year or two. And with interest rates coming into focus with the Federal Reserve, and everybody unsure of if they're going to raise, if they're not going to raise, if they do raise, how much they're going to raise, how many rate hikes there will be this year, things like that. Anything that really impacts the housing market, Home Depot has a tie into. They're not as direct of a play as something like a Lennar or a DR Horton or some of the home builders. But when it comes to home renovation and at-home projects, Home Depot is big in that market, and so they still are a pretty big housing play. And so anything that has to do with the rockiness in the housing market is certainly bound to impact Home Depot. But I don't think those impacts are going to be too significant to the core of the business. And then, like I mentioned, homeowners are going to be spending less on home improvement projects. They're projecting that at least for this next year. Their guidance looking forward was pretty conservative. They're actually projecting flat sales growth for this year, which of course we all know a lot of companies are pretty conservative with their numbers. That way they can just go on and crush them down the road and make their company look better. But the CEO in the conference call did mention that the home improvement space was looking to slow down at least a little bit. Houses are getting pretty expensive in some areas, and people aren't buying houses as rapidly as they were. And the home improvement people have been home for 2 years, and now that COVID is hopefully behind us, that people are going to be out and traveling, and they're not going to be spending as much time in their homes. So those home improvement projects, the demand for those doesn't seem as robust looking forwards as it has been in the past 2 years. Now, looking at the stock itself, it's currently roughly 25% off of its all-time high. Now, that being said, it is up 20% over the past year and 110% over the past 5 years. And it is currently sitting at a 2.43% dividend yield, which is a little higher than their long-term average yield, which sits just over 2%. So I added recently after earnings, anytime I can get a solid dividend growth stock at a discount, especially a 20% discount, I am always interested and always going to, pretty much always going to pick up a share or two. So I am excited about the future of Home Depot. I think there's a lot, they have a lot going for them. But there's also a few headwinds facing them, but their management team has proved that they're setting themselves up for long-term success by investing in the supply chains, and they have a very diversified business. So even if the housing market is a little rocky, they still have plenty of other growth drivers within the company that are going to take this stock and this company to perform in the long run.
Awesome, man. I love the pitch. Steven, you have a comment there?
Yeah, I was wondering, Dividend Hero, what's your goal with Home Depot? Like, what are you trying? Is it you're trying to get growth? Or are you trying to get the dividend? Maybe it's both, but just curious what your financial goal with that one is.
Yeah, absolutely. I mean, certainly, I would say it's more focused towards total capital appreciation, so a mix of dividends and growth. I mean, the stock itself, even without dividends, has been a great performer. I mean, up 113% the past 5 years. So there's certainly a lot of growth just to be had in the name, and then when you tack on the 2% dividend yield, um, with the dividend growth, I mean that's just compounding for great returns. So most of my investment goals at the moment are more focused on growing my capital and getting as much invested as I can, um, and letting the dividend growth compound, and then eventually those dividends will grow bigger, and
Yeah,
then kind of shift more towards maybe some higher yield or some ones like that. Does that make sense?
yeah, no, for sure. And I asked that question because I know if you're not 24, you're 23, right? You're a young guy.
I just turned 24,
Yeah,
so
yeah,
you're
that's what it
right.
was. Yeah, yeah. And so I was just kind of, I'm sure many in the audience will relate to kind of your age, where you're coming from, and might have a similar goal to what you're trying to accomplish with Home Depot there. So I thought that might be relevant there. So it's awesome with that dividend growth in there too, right? Where it seems like they're raising their dividend every year as well. So you're getting it's a good fight against inflation, especially what you got 50% extra increase there on the dividend, and with inflation running at 7%, that's awesome.
Yeah, absolutely. I love to see that, and that's a lot of what I look for in dividend growth stocks or companies is that dividend being higher than the pace of inflation.
Yeah, it makes
Um,
you also wonder too, like, because not many get 15% increases at work, right? Like raises
right.
and stuff, right? It's
Yeah.
like, man, like thanks for my 3 or 4 or 5% raise, and inflation's at whatever. And
Yeah.
it's nice to see my stock getting a 15% pay raise. So it's cool,
Yeah.
man.
Absolutely. I have my little note sheet here, and I did the math on that 5 year growth rate, and the dividend in 2017 was 89 cents per share, and after this most recent raise, it's $1.90 a share. So you're looking at $1.01 more per share. I mean, more than double in 5 years.
Do you and I know we kind of need to move on, but do you see it being sustainable? Just from, I know from a growth perspective, they got some headwinds, but from a dividend growth point, are they an aristocrat? They've been able to hold on to it and raise it every year for the last 5 or 10 years.
Yeah, they've been raising for 8 years. They had a rocky stretch of management about 10 years ago. Um, and so they haven't been, they're not an aristocrat. Lowe's, who is their main competitor, is an aristocrat. Lowe's has been paying dividends for, I don't know if it's 50, I don't know if they're a king yet, but if they're not a dividend king, they're getting there. Lowe's has been paying dividends a while. Um, and I do stand corrected. Home Depot has increased their dividend for the past 13 consecutive years. I don't know why I was thinking eight. but 13 consecutive years. So that's actually a little bit better than I thought it was. So I don't see that. I don't see that changing anytime soon. Every time after their earnings report that I look over their financials, I don't see any major red flags of anything slowing down anytime soon. And yeah, the growth in itself might fluctuate, but I don't see any risk of the dividend being cut, especially with them being able to weather through COVID, all the complications that came with that, and then now supply chain and inflation. Just seeing how they're handling that and hearing the tone and hearing the comments from upper management. They all seem very confident, and the numbers also portray the confidence in the business and the long term stability of the dividend and the stock itself.
Yeah, that's awesome. And I love how, my apologies, at the start there you said it was Amazon resistant. They have a bit of a moat that they can resist a lot of the Amazon effect. Maybe not with nuts and bolts, but definitely with lumber and some, picking up some of those parts that you need to get. And so that's a really good analysis there. I like that.
Yeah, absolutely. And then there's also just the aspect of every guy loves going to shop at Home Depot, like Saturday morning, just, I don't know. There's just something about going to Home Depot, getting some supplies, go back home and working on some stuff, whatever it may be, whether it's a wood project or stuff around the house, I mean,
A lot of pickup trucks there, right?
Yeah,
Yeah.
my F-150 fits right into the parking lot.
Yeah. Did I tell you I got one too? I got an F-150 as well.
That's awesome.
Yeah, so we got that in common as well.
Nice.
Yeah,
cool.
That was a great pitch. I just wanted to ask like one quick question just to kind of play the other side of the argument. If you had to pick one reason, and it can be brief, but if you had to pick one reason why somebody shouldn't invest in Home Depot, I guess like whatever in the bear case you're most concerned of, what would that be?
Yeah, I would definitely say the housing market and just the reopening of the world economy and travel heading into this summer and into the fall. At least as more of a short term reason, that would be the biggest thing. I could see Home Depot trading sideways for maybe 6 months. If obviously tech stocks have gotten just absolutely destroyed the past 3 or 4 months, and so I could see the appetite swinging back towards the higher risk names and some of maybe the value names or some of the more steady names like Home Depot, just kind of trending, just kind of floating sideways for 6 months. Which, if you look at the long term chart, they've historically done that for a while. Just the risk on, risk off appetite of the market. So, in the short run, I'm not one to predict one way or the other, but at least maybe over the next year, just the reopening and people not being at home as much. COVID certainly benefited Home Depot, I would say, more than it hurt it in terms of its core business. And so, as people start traveling and aren't in their homes as much, I could see a shift towards some other names in the market being more highly favored than Home Depot, and outperforming at least on a year basis.
Totally. No, that was awesome. And I always appreciate when someone can also share the other side of the argument. So that's great. And thank you so much for sharing that.
Yeah, absolutely.
Really good stuff there. Thank you, Dividend Hero. And if anyone's already not checking out everything that he is doing, I recommend popping in there. My guy is a killer, and I love having him on these spaces. So thank you for coming on, bro.
Yeah, Gav, thanks for having me. I'll hang around for a little bit, but I might dip in a little while. We'll see what's going on.
Appreciate you. Okay.
Cool. Yeah, man.
We are going to roll into Steven in just a second, and then we're going to go over to Quigley. Real quick before we get to Steven, y'all just heard Matthias from Asset Dash speaking on the space. Again, this is stuff that is pinned up top. The reason we do this space with Asset Dash is because we are asset pitching, and all of these assets can be connected into one spot. And I didn't think that was possible a couple months ago, but they have made it a reality. So if you're in the audience in a space like this, you're probably someone who owns at least stocks in crypto and potentially some NFTs as well. I know I do a lot of NFT spaces. There's people up on this panel who do NFT spaces. And if these are the type of stuff that you are interested in, this is the app built for you. It's very difficult to track all of your different assets. When you have NFTs, Their price moves every single day based on the floor, right? When you have crypto, you might have 6 different cryptos all over the place, rapid price movement. Maybe you have one in your Coinbase and a couple in your Robinhood and some elsewhere. And maybe with your stocks event, you have an IRA and you have a long-term account, and then you have a growth account. So it's a little bit of everything going on. And with Asset Dash, you can connect in every single one of these portfolios into one place, tracks all the floors for you live with your NFTs, gives you updates on your portfolio as a whole, shows you all your stock portfolios in one place, plus your crypto, plus your NFTs. So you get a total value of your net worth, which is a valuable thing to be an understanding of and to be able to track on a daily basis without having to go account to account to account, log in, log in, log in. It's all in one place plus more. So that's why I like it. That's why I've been using it. Apparently now they're teaming up with the Webmint guys too and what Quigley's doing. So I love to see that. Just getting deep into the space. The account's almost at 10K. Really just can't say enough there. I mean, they're only 70 followers from 10K. So if you haven't clicked on the Asset Dash and given them a follow, now's the time as this account blows up. So Matthias, anything you want to add to that before we go over to Stephen?
No, that was great. Really appreciate that overview. Yeah, we just passed over 100 integrated platforms, so like 15 different blockchains, all the major crypto wallets from FTX to Coinbase to Binance, so on and so forth, and then all the major brokerages, Robinhood, TD Ameritrade, Fidelity, and the list goes on and on. And yeah, we were voted #1 on Product Hunt recently, and we launched 2 months ago. So it's been an exciting time, and I'm happy to see that users are getting value out of it, and we're extremely responsive. So if you have any feedback or you want to see anything in the app or any new integrations, feel free to shoot us a DM, and we'll be there to respond and get your feedback.
Perfect. Well said. All right. With that, we are going to keep it rolling. Shout out Dill. Just saw you came up. You doing good, bud?
Yo, what up, man? Thanks for having me up. Yeah, this looks really cool. I'm just looking at Asset Dash now. So great, interesting conversation. I mean, I've only been here for a couple minutes, but I'm already very interested in looking at the app. It's really cool.
Awesome, man. We'll dig in. And after Stephen, if you have any questions, we could throw those out there. And then we're going to have Quigley. And then if you want to speak as well, we'll have the opportunity. So let's dive over to Stephen Welty now, who's going to be chatting with us about a different strategy. It's a little bit different from just investing in a stock. You had a more complex strategy, but I think the audience is up for it.
Cool, man. Thanks for having me on. Dividend Hero, might be the perfect trade for you with if you think Home Depot is going to go sideways for the next little while. One of my favorite trades to do are covered calls. I love to buy stocks in lots of 100 and then sell a covered call either 2 weeks or 4 weeks out from the date that I buy it. So just 1 second.
He didn't cut it. He didn't cut out or anything, right? He just said need a
Oh,
second.
sorry. Yeah, my apologies.
Okay.
Yeah, no, I had to clear
Cool.
my throat, and I just wanted to make sure I wasn't coughing into your ears there.
I just always think that I've lost service.
Yeah. So one of my favorite trades is covered calls. So what I do, and Dividend here, you can do this with Home Depot very easily because the stock is so liquid. I'll buy shares in lots of 100, and then I'll sell a call option against it. Either 2 weeks or 4 weeks out. And my favorite one to do it against is the NASDAQ 100, the triple Q. Why triple Q? Either that or SPY. The market on these two ETFs is extremely liquid. You are going up against hedge funds and pension funds. They're trying to hedge positions. They're trying to speculate on positions as well too. And you can sell options that are fully priced, really tight bid and ask spreads. And you can also even sell them 2 days in advance as well too. So the option market is fully developed on both of those ETFs. I get asked a lot, why don't you do VTI or VOO? And the answer is the option liquidity. I know I'm paying a little more for Q to get that option liquidity. But what it ends up letting me have is an incredible passive income. And another question too that I get often is, why don't you just do QYLD? And I'll explain that out fairly quickly here. I can sell a call option against Q 1 month out, and I can sell it out of the money to the point where I'm still getting 16% yield on the capital, but I still have room for capital appreciation should the stock go up. QYLD sells at the money 1 month out. And so they've capped it, and they're going to give you a 12% yield. QYLD is great if you don't have enough to get 100 shares of Q, but if you're into like 200, 300 shares of Q, you should be doing it on your own and selling out of the money. So what does it mean when you sell a call option? What I'm selling is the right to somebody else to buy my stock at a particular price anytime between now and the option that I have right now is for March 18th. So I've sold the 354 call option against Q for March 18th. So anytime between now and then, somebody can buy my shares from me for 354. Right now, I'm just going to pull it up. Q is trading at my apologies for the pause. I had Home Depot up on the screen so I could ask Dividend Hero a couple of questions. Right now, it's trading at 347 aftermarket. So nobody's going to exercise that option against me because they can just go to the market, buy at market, and buy them at 347. But some guys would want to have the option to buy it at 354 from me between now and any time into the future, or between now and March 18th. If it goes to 360, 370, 380, they make a ton of money off me. But if it stays here and it goes sideways, or if it goes down, I pocket that entire premium. I can make between $3,000 and $5,000 a month on enough Q shares on this. It's a terrific passive income, and on top of this, the tax treatment with where I'm at is capital gains. So it's not counted as interest, ordinary income, or regular income. It's counted as capital gains. And so it's tax efficient as well, too. That may not apply to your area, depending on your jurisdiction and where you live. It might be treated as short-term capital gains. But for me, it's a terrific play. I love seeing the two in my brokerage account fight against each other as the month goes ahead. If the stock falls, the call option drops in value. If the stock rises, the call option rises in value. But it's cool to see the two fight against each other as the month goes ahead. What I typically try and do is I always sell out of the money. So I always want to have that ability to make some capital appreciation should the stock go up. I usually try and sell between Delta 20 and Delta 25 if we're in a down market, which we have been in, because I want to have that pop-up potential, which I think we are in right now. I think there's a good potential that QQQ or these other tech stocks could jump. And so I want to have that ability to capture some of that capital appreciation. If we're at a market top, we're hitting a lot of all-time highs, I'll sell Delta 20. Now, what that means is options are priced using Greeks. The delta measurement is a measurement of how much the underlying stock moves for every for the movement of the option. It's a measurement of being able to judge how far out of the money do you want to go. So when it's Delta 20, what that means is for every dollar that the stock rises, the option will rise in price by 20 cents. And as it gets closer and closer and closer into the money, the delta will actually start to rise as well too. So it'll get closer to being 1. And in the money, the option is moving in lockstep with the underlying stock there. So that's one of my favorite trades. I love it. I try to get between 15% annualized return on the options per year. Is it the perfect trade for everyone to do? And you can do it on, my favorite one is doing it on QQQ, but you can do it against Home Depot. You can do it against SoFi, DraftKings, Intel, all of the major S&P 500 stocks you can run cover calls on. Should you be doing it? Well, it depends on your goals, and that's why I asked a Dividend Hero at the start. There's what his goals was with Home Depot there. I'm an older. I'm 44 years old. I'm getting into the later stages of life, and I want to start generating additional income off the assets that I have, and so I'm trying to generate that. But I do think it's a good trade for even the younger guys to get used to, because as you refine and get better at trading covered calls or shorting call options against your stock, you will learn how to get better and better at it as you go and get later and into your 30s and 40s and get closer to financial freedom and retirement. If you're a young guy, you probably don't want to be putting call options against all your stock, because you could get left holding the bag, and you miss out on that opportunity if it rises sharply against you. But nothing wrong with taking $1,000. You can do it on SoFi right now. Let me see. I think they've been taken through the mud lately. Just pulling them up. I think they're at like $11. Yeah, $11.44 right now after hours. So you could take $1,144, buy SoFi, and just put a call option on it, and you could try it out for a month and see how that goes. If you got a portfolio of 20 grand or 30 grand, it's a great trade just to try it out, see how it goes. And as you get better and refine your skills at trading call options against stock, as you get older, now you get a great source of income there that you could tap into, manage yourself, and run. And you get access to the funds right away. So I sell the call options. I sold mine on February 22nd for March 18th. I think it was. It was on the Monday. No, the Tuesday. Yeah, so on Tuesday, the 22nd of February, that's when I sold my March 18th call options. And I get the money right away. It's in my account. I can pull it. I can take it out. Or I can reinvest it. I can buy shares of the underlying if I want to. Because they're secured with the stock underneath. They're fully hedged. There's no margin call risk on it. Like, they're not going to come to me and say, hey, you shorted that option. We need to come to you and get additional money or stock. Because it's covered, it's hedged. One last thing I'll leave you guys with is a myth with call options is people will sell them or promote them and say, hey, it's like a risk-free, easy, free money way to make some income. That's not true. There are risks that come with it. So I'll go over some of those. There's upside risk, there's downside risk. A lot of people focus on the upside risk, where if the stock surges, you get called away and your stock gets sold under market value. Yeah, that's the one that kind of sucks, because the stock doubles or the stock goes up 20-30%. You lost out on that upside. The biggest risk, however, is downside risk, and that's why somebody's willing to pay you the money. The downside risk is the stock collapses, or there's a crash, or there's a sharp correction, and you're left holding a bag of stock. That's the worst outcome that you could hope for, that you held that risk, you sold your upside potential, and then the underlying stock went underneath you. So is it risk-free? No, it's not. Some guy pays you to hold that risk for him, and for that you're rewarded for it. But it's one of the lowest risk ways that you can start trading options, and it's a great way to earn passive income on the capital that you build as you're good with your budgeting. You invest every single month, buy some index funds. As you get a good capital base in the future, you can start selling call options against it. So I don't know if any of you guys have any questions or.
Yeah, this is definitely a strategy that I think more people should really be understanding and listening to. So that covered call strategy that you just explained works best when you're able to do it covered, obviously, versus naked. And when people are listening in the crowd, a couple things just to note is, each option does cover 100 shares of stock. So you would basically need to be able to buy 100 shares typically of whatever stock you're going to be selling these on. And then you will essentially, let's say you bought, in this case, QYLD, something like that, or another one, even if you just had NEO or one of these other things, or Home Depot, where you think it's going to traverse sideways or potentially go down. But, maybe that's in the short term. Maybe you think it's going to traverse sideways for a month, 2 months, 3 months. But you're saying long term, this is something I want to have in my portfolio. That covered call strategy is really good, where you can go ahead and sell those, collect that premium. And like you said, if it does go down or it goes sideways, then you can collect and keep that premium. And if it does go up, well, you actually, you're not really losing money per se. You're just losing out on certain upside, right? So basically someone could buy those shares off of you at a price that is beneficial to them, and you would lose out on upside. But as long as you're covered, you don't have unlimited downside, right?
Yeah, exactly. And yeah, I only sell them covered. I don't do anything naked. Another thing too, as you get seasoned or have experience with trading covered calls, is you really learn a lot about how equity markets work. A stock that's priced, I'm looking at SoFi right now, 11.44. The speculation on what it is worth in the future has value. As it gets more volatile, as it introduces a dividend, as interest rates rise, time into the future, the further you go out, those all affect call option prices and also put options, but we're focusing on call options here. So as you go out into the future, those all have value. So the ability to buy SoFi at $15 in December has value, but that value in December is different than the value in April. And so as you get better and better at trading covered calls, you really learn a lot about how equity markets work and how different factors come into play to price an option. And it's cool to see in real time as you look at like the option chain. You can watch it in real time. Like, these guys are all pricing in how much SoFi is worth, or DraftKings, or Home Depot, or Intel, what it is priced in March. And you see it in real time. They're all updating all at the same. You're like, that's incredible. And then you start to dig into why is that $15 call option worth what it is, and why is there a market for that, and why are they willing to pay that much? Like right now, let's see what it is for SoFi for March 18th. Hey, so check this out. So the $12 call option on SoFi is worth $100 for 100 shares. So you go buy SoFi. This is insane. $1,144. Someone will pay you $100. So like roughly, this is called a 10% return for the right to buy it from you for $12 on March 18th.
I love it, man. It's a crazy world with those cover calls. I do want to get some of our other speakers in here because we're about 45 minutes in. But Matthias, do you have any questions or anything else you want to add to this one?
No, that was super insightful. Thanks for sharing everything.
Yeah, man. Thanks. Appreciate that, Dash. Appreciate it, man.
Yeah. If anybody wants to learn more about this cover call strategy, or also on Ethereum mining and so much more, definitely recommend you check out Steven, throw him a follow, and roll through his page and see what's going on there. Appreciate you being on again, Steven. Thanks for hanging out.
Thanks for having me on, man. I really appreciate the opportunity to come up and share that strategy. It's not a common one. I love sharing it. It's cool to see those in your brokerage account and getting paid for future money. Like it's crazy. You really learn a lot about how equity markets work and time value. Appreciate it.
Yeah, it's really next level. Okay, awesome. So we are going to move on over. So first of all, Dylan, what's going on, man?
Hey, what's going on, Gav? Can you hear me?
I'm good, dude. Appreciate you coming up. If you're free to hang for a little bit, I'm going to go to Quigley to cover his NFT stuff, and then you were on, so I would go to you if you want to throw out maybe a few minute pitch on a stock you're liking, and then we have Dill too. Does that work for you?
Yeah, man, that works good.
Awesome. I appreciate you coming up. All right, Quigley, thank you for the patience. Would love to hear from you if you want to throw out there several minutes on, a bit of. We had 2 stock pitches, and now we're going to get a bit of an NFT pitch here. So looking forward to it.
Yeah, so it's going to be a little bit different than the previous two speakers, obviously, with their financial expertise. I'm not a financial expert. I was literally like trying to take notes during that, learning quite a bit about some strategies that I need to start looking into. So the Grandpa Apes, this is a project that I currently hold 7 of these grandpas. So I'm not like a whale. I don't have like 30 of them. I was temporarily sort of for a little bit helping them. So as a staff member, but it was only for a few weeks, mostly just helping them like get sort of promoting, on Twitter and that sort of thing. But I'm very well connected with the community. And that's kind of the first thing I'll mention. They have one of the strongest organic communities that you'll find. Right now, like I said earlier, there's about 200 of them on a Twitter space, just having a good time, sharing their mutant sneak peeks and that sort of thing. But here's the cool part about the Grandpa Apes. It's pretty easy pitch because they are following the Bored Ape Yacht Club roadmap. So they're not reinventing the wheel. They're essentially saying, why not? Why not just use the same roadmap? On one hand, it's a derivative project, and so we see a lot of the apes, various apes out there. But they are doing it essentially just as a Grandpa Ape. It's the same format, the same roadmap. So we have 5,000 Grandpa Apes. Then there's the airdrop literally happening tomorrow. So we've been waiting for 6 weeks for this. So it's a pretty exciting time. But there's going to be an airdrop of mutant serum, just like you saw with the Bored Ape Yacht Club. So you're going to have your original Grandpa Apes, and then there's going to be a whole new set of mutant apes for those that use their mutant serum, which you don't necessarily have to do. As you see with the Bored Ape Yacht Club, they have some people that will hold on to their mutant serum for a year and sell it later for much more. So it's kind of a strategy component to it, where you could go ahead and mutate your apes. Personally, I've got 7. 2 of them are like pretty rare or very rare in the case of my PFP, versus like some of the other ones I have are very common. So with what I'm thinking is, I'm going to take my 7 serums. I'm only going to use them on the rare apes, and then I'm going to hold on to the extra serum until a later time. I may use them down the road. I may like sell a couple apes and get a more rare ape, that sort of thing. So there is some strategy to it, as far as how you want to collect and what you want to sell and when. But from there, they also have another companion collection coming. And so if you know Bored Ape Yacht Club, they have the Kennel Club. So they have their dog essentially that they have for their collection. And for the grandpas, they're all getting kittens. So there's going to be a kitten collection at some point here coming up. That's just going to be an additional value to holders. But ultimately, from a utility standpoint, the goal for the Grandpa Apes is to actually have their own country club. So it is the Grandpa Ape Country Club. And so it's a very, I would say older. It's kind of ironic because it's grandpas, but it's kind of an older group of holders. It's a little bit more, they're a little more savvy. A lot of golf people. So I'm actually not a golfer. I do disc golf, but not a whole lot of real golf. But we have a lot of people that are super into that. So they're trying to partner up with like Lynx DAO, if anyone's familiar with that, or essentially a golf-based DAO that is using Web3 solutions to help people save money on golfing. So they're definitely going to be doing something with that at some point down the road. But right now it's just a really fun community, great PFP art. And, like I said, following that same roadmap that the Bored Ape Yacht Club has been following. One other thing I'll mention is they, on their Discord, they've done something I thought was really cool. I haven't seen it in other projects that I've been in. They essentially have it tiered they have a role essentially for however many apes you own. So if you have 5 apes, you're allowed into like a smoking lounge. If you have like 20 apes, you're in the cigar lounge. If you have 30, you're in the VIP. And what's cool about that is at each level, you're essentially going to be able to communicate with others that are on that same sort of level as you as far as their investment goes. So it's kind of a nice place to kind of get that VIP role and then be able to kind of have a private chat, if you will, with some of the other holders at that level. So they do things like that in their Discord. They're very active. They don't have, I don't see their stats being put out as much from like other sites, but they do have a lot of internal members of the community that are putting out their own stats. But just thinking about Asset Dash and like seeing them put into something like that would be pretty cool. I'd like to see how those numbers can be displayed in a way that makes it easier for people to follow. Because it would certainly, I think, be interesting to see a comparison between where the Bored Ape Yacht Club was 6 weeks in and where the Grandpa Apes are 6 weeks in, for instance, just to see like, what that trajectory could be, if things kept going in that direction. But yeah, we're really excited. I actually work with Whitelist, as it was mentioned earlier, Whitelist NFT and WenMint. We have a launch pad and a whitelist management platform for founders. So it's something where, as a team, the Grandpa Apes have kind of taken over. We all are investing in them. We're definitely excited about the Grandpa Apes in general. But I just wanted to mention that like was said earlier, we have a partnership with Asset Dash that we're really excited about, and we were happy to share a space with you guys tonight and kind of share a little bit about what's coming down the pipeline there. But yeah, do you guys have any questions about the Grandpa Apes that I can try to answer for you?
Yeah, it sounds like there is a bit of, kind of, you just explained the ecosystem and the utility. I'm curious, when did they launch?
Yeah, it was 6 weeks ago, and actually, it's a really cool story. I love comeback stories. So they actually had a failed launch. They had a first launch that just bombed. Had some issues with their smart contract. Didn't do much like marketing, so just like they basically minted, I think, 100 and stopped because it was just not working. And then they hit the reset button and relaunched and they did a stealth launch and sold out like in 24 hours. So it was a very like groundswell organic type mint, which we don't see that happen very often. So I think it's just I attribute it to the artwork. I think if you get in and look at some of these grandpas and some of the unique things they did, even though it is a derivative of the Bored Ape Yacht Club, they're not the same. If you get in and look at them, I mean, they have some of the same features and whatnot and backgrounds, but there's a lot of unique artwork. So
very cool. Like to see it. And how's the floor been moving and the activity and the volume within the project look like?
Yeah, so I was going to pull up the numbers because of all the statistics and whatnot that were being brought up from the other speakers. I was like, maybe I should try to sound like, I've really got these numbers down, but I do know, I will tell you this, over the last week, we've gone from, I believe it was a 0.7 ETH floor to up to last night, it was at 1.2 ETH. So that's actually really strong growth for, a week. But since I have a couple of the more rare Grandpa Apes, I tend to focus more on individual traits and kind of where their floors are, because that gives me a better idea of the value of like what I'm holding. But it's still important. I think it's like one of the things you want to watch is that floor price. But volume wise, I can't tell you the number off the top of my head, but it's they've had a solid 6 weeks for sure.
Very cool, very cool. And so I've seen you've been very involved with the community and, running spaces. Now you're dealing with mutants and things like that. In a year from now, what is the goal of the community? Has it changed? Has it evolved in your eyes?
Yeah, I think, the idea of having so like Bored Ape Yacht Club, for instance, they've done some IRL events that they've gone to and brought people together. And I think there's a real demand from the community to have IRL events, so obviously getting a country club or maybe even just having some sort of deal with multiple country clubs where they were able to have some more events, in real life. I think that's where things are headed. But it's a very interesting question for a lot of NFT projects. Is like kind of where do you see yourselves in a year? We talk about utility from the WenMint and Whitelist side. Like we're expecting some game changers this year from these projects, like things that are going to revolutionize Web3 and like totally change the game. So projects like the Grandpa Apes, they're kind of like on the other side as far as like it's a PFP project that is developing utility through their community. which I think has potential, but it's a little different than what we kind of typically look for new projects. We're looking for things that are going to change, develop apps, develop, new ways to, to participate in commerce, that sort of thing, where it's really, really changing things. Because at some point, I think everyone kind of realizes like there's only so many of these like 5,000-10,000 PFP collections that can come out and succeed. We need to have a real utility that makes sense,
Absolutely. And yeah, I took a look at the volume and it's actually really good. Obviously, that floor has had a significant run in February. Started out February closer to 0.2. Like you said, currently 1.1. Also, a ton of sales. Literally within the last hour, I would say there's probably 30 ETH maybe traded in here. So it's definitely moving. Really good case there. And, props to you for kind of getting into that early and holding through and finding the value. I've seen that as your profile picture for a while. Matthias, any questions?
Yeah.